I am here with Jason Froelich. He is the president of Home Services Lending, and he is an expert in the home buying process. Jason, can you share with me a little bit about the different kinds of products that folks can leverage in purchasing a new home?
Sure. So we're in a first-time home buyer home, and thanks for having me. By the way, this is really awesome to be on location like this. So there are different loan products, really for everybody's different and unique situation. There are conventional loans, there are FHA loans, VA loans, and even USDA loans for our buyers that are a little bit outside of town. And depending on everybody's unique situation, each loan can be perfect for that particular buyer. We just have to sit down and really figure out what their wants and needs are and what's the best fit.
Anything specifically you recommend for a first-time buyer?
So first-time home buyers, I recommend a consultation. And I know that's going to sound a little bit strange and not specific, but every first-time home buyer that I work with, we're really trying to figure out two things. Where do they want a payment to be, right? A monthly mortgage payment. And then how much money do they want to put out of pocket? And is that zero? Is it $20,000? Is it $40,000? Knowing those two things really help us zero in on the right product and the right program for them.
Jason, what considerations do you have when it comes to budget and affordability?
I think everybody's a little bit different, around that situation. And so actually sitting down with one of our mortgage professionals is probably the best way to really understand what your budget's all about versus what my budget's all about, right? So we oftentimes start with first-time home buyers and ask them how much they're paying for rent. Now, some people are still living at home, so that's a difficult question, but we start with that, and then we really talk about what kind of down payment options they may or may not have, and try to dial in a payment that's going to fit their needs, and then back into what kind of a house that might buy.
Thanks, Jason. It is always great to have you on the show, and we have more to come from you later.
Great, thanks.
We are back with Jason Froelich, the president of Home Services Lending, to talk about another very important topic in the home buying process, down payments.
Absolutely. Thanks for having me. I appreciate it.
Well, Jason, I know you have some really important insight when it comes to down payments, particularly during the wedding season.
Yeah, there's a lot of different strategies when we talk to clients, especially first-time home buyers, about accruing enough money for a down payment. But one kind of little known fact or program that's out there, and our setting really kind of brought it to mind, is there is a wedding gift program where you can actually get with your loan officer ahead of time, get the proper documentation set up, and then people who decide to go ahead and give you wedding gifts of cash, checks, Venmo, that sort of thing, that money can actually be used towards your down payment.
So this is something you have to do in advance to be able to use the money for that purpose.
You're going to want to get it documented correctly, and documenting it after the fact is very, very difficult. So we always encourage people to come in, get yourself pre-approved, right? And then also get the parameters and what you need to get set up to make the program work for you.
Jason, can you tell me a little bit about what goes into an actual mortgage payment?
Sure. So a mortgage payment is really consists of four different pieces. It's the principal and interest portion, and that's dependent upon your interest rate and how much you borrow, right? So that's that portion of it. You have your taxes, your monthly taxes for the year, real estate taxes, and you have your homeowner's insurance. And then you also have another insurance. If you don't have 20% down, you have something called private mortgage insurance, or PMI.
Explain to me what PMI is.
Sure. So PMI actually was created to allow people to be able to put less than 20% down. Because back in the day, a long time ago, well before my time in the business, as old as I am, banks and credit unions and mortgage banks would only lend if you had 20% down. Now, if you can imagine having a first-time home buyer come up with $60,000 on a $300,000 house right now, that's a big number. And so private mortgage insurance really allows lenders to allow for lower down payments. And the lower down payment comes with a little bit extra in their payment, right, to pay for insurance. And so if that loan defaults, the lender can get some of their money back. So it takes some risk off the lender and allows people to put less money down.
Jason, it has been fantastic to have you here today. And this is one of the great value added benefit of Iowa Realty is fantastic partners like Home Services Lending. If you go to iowarealty.com, you'll find our home buyers checklist and toolkit there to help you navigate the home buying process.